factors that affect price movement in the currency market, but also in the stock market. So, as investors, you and I, as traders, we need to understand those economic factors that come out monthly that can affect our position, that can affect our investment or stock. One of these factors is the consumer price index. So, what is the consumer price index? The consumer price index is the change in the price of goods and services purchased by consumers. So, why is this important for us traders and investors to understand? So, consumer price index amount for a majority of the overall inflation. Majority of the overall inflation is the consumer price index. Why? Because price increase. That's what inflation is, the rate at which price increase, price of goods and services. So if price of goods or service continue to increase, that's mean inflation, price inflation gonna be, the rate of inflation will be high. When the rate of inflation is be higher, the people who set monetary policy, the Fed, is gonna get involved in the economy. So we need to understand that inflation is an important to currency valuation, because rising price lead to the central bank to raise interest rate out of respect for their inflation containment mandate. The Fed, the central banks around the world, no matter what country you're in, the central bank has a mandate to do maximum employment, but also to keep inflation down, to keep price down, to keep price stable, they call it. So if price is out of hands, that's mean it's increased. What's going to happen? The Fed will interest rate in a way to bring inflation down to the 2% mandate here in the US. If in your country, it might be a different mandate, the normal inflation rate might be more than 2%. So in most majority of the country in the world are using the US dollar to buy food, to buy services, to buy product they need. To every import need US dollar to buy them. Okay, because the US dollar is the central reserve, is the reserve currency of the world. So if the US Federal Central Bank is increasing interest rate, that means it's gonna cost more to buy the same amount of food, not only here in the US but in other countries. That's why when you're trading, when you're a currency or forex trader, you need to understand that as well, because as price increase, inflation increase, the Fed central bank will increase interest rate. Once interest rate increase, the value of the US dollar will increase. That means you need more things gonna get more expensive for you. So if you're in a country, you need to buy US dollar to buy things to import in your country. You can see how the big impact that is. We need to understand, as investors and traders, the CPI number coming out every month. When that's happening, you need to pay attention to what's going on. So if you're in a position, if you have a stock, you need to understand if CPI is gonna go high or low, how to make a good decision. And don't buy stuff before the CPI come out. So you might automatically start losing money as soon as you buy it, because you might get in a position in the report is bad for your position. You might lose money because that can push the price either up or down 200 pip or 200 points. You need to understand that so you can make better decisions. You can be a consistent trader and investor in the market.